Hi, and welcome to the end of October update from the Wealthy Doctor Institute. Physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show just a few ways where just a few adjustments each year can help build and protect wealth. All of the strategies in this book are easy to calculate each month. For those of you new to the concepts in the book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So this month we'll cover our strategies, including our safety belt systems, including both the original version to cover my book as well as the sector server version. Then we'll review the momentum rotation systems and how they can help improve our safety belt systems. Then we'll review the free sector server strategy that comes with any subscription. And then we'll remind ourselves of the rules for stock tip strategy for those of you who absolutely positively have to buy individual stocks for some strange reason. That's a lot to go over, so let's get started. So when reviewing our systems, we'll start with our safety belt systems. The first one is the one I cover in my book called the 20-month simple moving average system. The reason why we call these safety belt systems is that it helps to tell whether or not it's relatively safe or dangerous to be in the stock market using objective criteria generated by mathematical algorithms. No system is perfect. We're not trying to prevent all losses. We're only trying to prevent the larger losses of the larger bear markets. But as with any other investment systems, the key is diligent application of the process. So the rules for the 20-month moving average system is simple. All we do is take the price of the S&P 500 index fund, and if this fund is above the 20-month moving average, in other words, the average price of the fund for the last 20 months, it's relatively safe to stay invested in the fund. Otherwise, get out. It's literally black and white. The 20-month moving average is our safety belt. It only works if we watch it once per month. Not more often, not less often. If we watch it more often, we'll get whipsawed. If we watch it less often, we can suffer larger losses before we catch losses small enough to make a difference. So here's a graphical representation of what we're talking about. If this blue jagged line is the S&P 500 Index Mutual Fund, dividend corrected, and this red line is the 20-month moving average, then this month the mutual fund closed with a price of $208.63 per share, which did increase a little bit, as well as the moving average, which also increased to $258.66. So now you don't have to do this next step. I just do it for clarity's sake. If we divide the price by the SMA, then we get an 8.5% cushion. In other words, if the fund goes up, sideways, or even goes down up to 8.5% by the end of next month, we're still relatively safe. However, if it goes below this number, then it's too dangerous to stay in the stock market now. Right now, this system is saying it's safe. And here's Sector Server's StormGuard Armor version. Remember, Sector Server has StormGuard Armor, which is a safety belt system, and it's telling us that for the last month, we've been in stocks. There has been no trade signals, so it's still relatively safe to be in the stock market. In fact, if we take a look at the StormGuard Armor indicator, right now it's positive 0.02%. So it's barely positive. That's okay. As long as it's positive, it's still relatively safe. So the next system we're looking at is the momentum rotation system. In my book, I describe one that's called the monthly rotation investment system. There are many rotation investment systems out there. I called mine the MRI system. If you recall, I no longer use the one described in my book, but if you take a look at what I did substitute for using Sector Server to rotate among the same three sector mutual funds, the S&P 500 Index, the Emerging Markets Fund, and the Inverse S&P 500 Index, you'll find out that because now we have such a robust safety belt system, we no longer needed the Inverse S&P 500 Mutual Fund as a safety mechanism. So now I no longer follow the sector server version of the MRI system either. So here's a sector surfer version of rotation. If you take various mutual funds or ETFs, in this case we have funds representing large cap, small cap, mid cap, international emerging market funds, and real estate, as well as long-term treasury bond fund. All we're doing is every month stripping away the noise. We can take a look to see which of these funds has the best momentum, and then just buying that one fund. As long as that fund is still at the top, we don't have to make any changes to our portfolio. Otherwise, we rotate into whatever one is new winner. So in this case, for this month, there has been no trade signal for this strategy. Our next system is the free strategy that comes with Sector Surfer. Now, yes, for the most part, if you want to run Sector Surfer with a custom strategy, it costs around $10 per month. However, you can have a free strategy. The free strategies are not as good as something that you could probably build from scratch using their engine. However, at least it's free. So just to take a look, the free strategy uses generic asset class funds. They do not use sectors. They use an older version of StormGuard, so it's not as effective. And they do not separate out stock from non-stock funds, so you don't really optimize the performance. However, having said that, here's an example of a free strategy that you can get with Sector Surfer. You have all these different asset class ETFs rotated, and you can see how when the markets are crashing, we use cash to help mitigate our risk. Otherwise, we're in one of these ETFs when it's relatively safe to be in the markets. And if you've been following this, the trade alert is we're supposed to switch everything in this strategy to the international ETF, the EFA. That's a ticker symbol. So our next system would be the stock tip strategy. Again, this is only if you're absolutely positive you have to buy a single stock for some strange reason. So with the stock tip strategy, all we're doing is if you want to buy a stock, remember to limit risk to only 1% of your portfolio or trading count. And you do this by, for instance, if you have a 25% trailing stop loss order, if you use only 4% of your trading count to buy that one stock, if this 4% of the portfolio loses 25%, then you only lose 1% of your portfolio. Get that? That's why you only limit your exposure to 1% of your portfolio by buying 4% of your portfolio. If you don't get stopped out, and if the stock keeps on going up 33%, then the stop loss has essentially gone to break even. In other words, if it goes up 33%, if it goes down 25% from there, it's basically where you bought the stock for. So, you're relatively safe. You can go ahead and use another 4% of your account to buy another batch of stock. And you keep on doing this until you're eventually stopped out, because make note, you will eventually be stopped out. So in summary, we've gone over our strategies, our safety belt systems, how we incorporate momentum rotation systems to our safety belt systems. We looked at our free Sector Surfer strategy that comes with any subscription, and then we looked at stock tip strategies. So keep those questions coming. I know I talk to several of you personally each month, and I realize that for some of you, these video updates are not enough, especially if you're still unhappy with your current investment strategy or lack of strategy. I'm going to offer a complimentary investment wellness checkup session for you, just you and me. Ask all the questions you want, no matter how seemingly basic or clueless you think you are. In our checkup session, we'll together create a sense of clarity about the financial future you really want, the reasons you're investing to begin with, and how to get you there, discuss investing building blocks that are more specific to your situation, determine what has stopped you in the past from getting what you want now, identify what are the most important steps you need to take now to get to your investment and financial goals, and then complete our consultation with the excitement of knowing exactly what to do next to create the road to a future you really want. Think CME, only the topic is financial, and tailored to you. Think wellness checkup, because whether or not you feel financially well, if you had a financial cancer or blind spot you didn't know about, wouldn't you rather at least know so you can deal with it before the problem grows and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, Until next time, invest safely.